Hi students, welcome again. The next thing that we are going to discuss in the ratio analysis is the very basic ratio, that is the concept of the profitability analysis. In the profitability we have different ratios. We will discuss all those ratios one by one. So now we are going to discuss the very first ratio, that is the net profit ratio. NP ratio, net profit ratio, or simply the net income ratio. There are different names are there. So the formula is simply like earning after taxation. What is earning after taxation? So it is simply the net profit of the company divided by the sales or the net sales of the company. So no need to adjust for that net sales. So we just discuss with respect to the sale. So the net profit of the company and the sale of the company. So what is that formula? What is the purpose of that formula and how we are going to use that one? For example, if the company is selling the goods for 100, the total goods and services they have sold in that specific period is 100, let's assume. And at the end, their profit is like a $15. So out of 100, they have got only 15. So that 15% or $15 is what their net profit. The last year, for example, the profit was $14. So it means the last year 14, this year 15, it means there is an improvement. So we will discuss that thing with the calculation. So we have a one information here. The income statement is there. If you see, like a revenue or the sale is 160, the cost of goods sold, gross profit is 40, the operating expenses, we have ignored the income here, the other incomes, but so the total operating expenses are 17, so 23 is the operating profit, or what we say the earning or profit before interest and taxation. Then we have interest cost of 2, and then the profit before taxation is 21. Then we have a taxation of 6. So the net profit, what we call the profit after taxation or earning after taxation, is 15 for this year 2021. Now look at the previous year. So we are doing things simultaneously. We are doing the ratios and also the trend analysis. We are looking at the previous year figures also. If you see here, the sale was 90. If we look at the things as a whole, we will see the last year the sale was 90, but this year sale is 100. So the owners, the users of the financial statement, the investors will be very happy. No, it is not the final thing. That sale is not that much important. Obviously it is important, but not that much. We have to go for more detailed analysis. We have to see everything, and we have to see what is the overall net profit of the company at the end of the year. So we have a 45 is the cost of sale, then we have a gross profit, other expenses are there, we have a finance cost or the interest expenses are there, we have a taxation also, the net profit. The net profit this year is 22, and here it is 15. Means previous year sales were less, but the profit is more. This year the profit is 15,000 or 15 million or 1,500,000, but the previous year it was 22. And the most important thing again for the shareholders, it is 1.0 per share. Earning per share is 1.0, but last year it was 1.2. Now we have to see that how the profit is improved. So we will look at the percentage. So we have a formula here. If you see, very basic formula, very simple formula. We have a net profit divided by the sales. So net profit here we have 15, and the sale is how much? That is 100. So we will simply divide the 15 by 100. So the answer is how much? That is 15%. In the same way, previous year the net profit was 22, and the sale is how much? Sale is 90. So 22 divided by 90. So the answer is 24%. So if we look at the basic thing from here, the owner will be very happy, the marketing team will be very happy that the sale was 90, but the sale now is 100. So they will be happy. But if we look at the detailed analysis, we will see the last year the net profit was $22, but this year the net profit is only $15. And the most important thing, the earning per share was 1.2, but it reduced from 1.2 to 1.0. And even with the ratio, if we see, the last year was 24%. Means if you are selling a goods for 100, out of 100 your net profit is 24%, but this year the net profit is only 15%. This is a major difference, the major reduction in the profitability. So if we look at the net profit ratio, there is a major decline. So what is the decline? It was 24% the net profit, but now it is only 15%. So it means sale improved, but the net profit of the company reduced. Why? What are the major reasons? The very basic reason, the very basic thing that is very important is the concept of the inflation. You cannot say that only the sale increase means the company's overall performance improved. No. For example, we just assuming a very basic thing, the very, you can say the detail or not there. So just say that they have selling a goods for 90 and here 100. Let's assume they have sold, let's say 90 units and here also 90 units. Mean what? The amount, the dollar amount increased, the sale improved from 90 to 100. But if we look at the units, these are what? These are the units. So it means the price was almost $1 for 1 unit last year. And if we look at this, the answer will be almost 1.1. So what does it mean? It means that the units are same, only the sale increase is just due to what? Due to the inflation, because the price was $1 and now it is $1.1. So there is no major change in the sales of the company. The units are same. So that's why they have to go for the further analysis. They have to look for the information that what is the net profit of the company. Either the profit is improving or it is reducing as compared to the previous year. And also they have to look at the earning per share. We will discuss the earning per share in more detail, how it is calculated, what is the formula for that in the next lectures. But here just we have to focus on the earning per share. It is increasing or decreasing, and also the net profit, either it is increasing or decreasing. So the first ratio that we have discussed is the concept of the net profit ratio. So the net profit ratio, how it is calculated and how we are going to compare, and also is it the change or the improvement in the sale is just due to the improvement of the number of products or just due to the inflation. If the number of units are not changing and it is just changing due to the inflation, it means there is no improvement in the performance of the sales team. So that's why we have to consider not only the value but also we have to go for the in-depth analysis. I hope you have understood the very basic concept of the net profit ratio, but still if you have any doubt, if you have any question, you can ask me in the comment section. Thank you very much.